Hello, 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 hello. Happy Thursday, Unemployment Thursday, post FOMC, Swissy Bank cuts, surprise cuts, Bank of England holds steady. How's everything going this morning? That sums it up, and it's party on, so we don't need to talk about anything. The markets, everything's good. Everything's good in the world. Good morning, Jacob. First in. Good morning, Mark. Thank you for being here. Good morning, Sterling. Sterling, where you get tied up with work? I expect to log on and see all the news scroll by, and there's no news. Heinrich, I bet you got tied up with work. Yeah, there you go. Initial jobless claims. We'll take a look at those numbers. The Philly Fed's numbers came out. Uh, what else do we have? Good show on Ninja yesterday. Thanks. Thank you. And yeah, I didn't catch all of Bob's show, but I caught the tail end of it. So, thank you for tuning into that. Just trying to give some more specific information. Sending foreign troops, yeah, might have irreparable consequences. We're just letting people filter in. Was there a problem getting into the live stream today? Because, there are a couple people in here, but there weren't many. Hello, Charles. Hey, Jacob. Well, little potential NQ hourly double top. Well, might never trigger. Apple has good news, so up it is, right? It was yesterday turned into sell vol post event and buy it all. And look where volatility is this morning. Sell vol, buy it all. We'll go through stuff. I thought, Powell was not disruptive to the markets. I think the markets took it. Okay, we're still getting our 3 cuts this year. All's good. Cuts start in June. Powell sort of brushed off, well, there might be a little bounce in inflation, but we have to wait and see, blah, 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 blah. I thought he was a little overly dovish instead of hawkish, but whatever. Markets took it and ran with it. And actually, I was looking, hey, the market's probably going to run with this, and they did. So that's where that sits. What I think is being overlooked, and this is the problem because if you've read, I've talked about this book before, but read Ubiquity, the book Ubiquity. I forgot the authors who wrote it, but it's a fascinating book, and it's a study of a lot of the appearance of overstability leads to more under instability. And it was done with a grain of sands piling up on each other. So I think here's the problem. The markets are getting so complacent that if we do have a black swan event, and black swan events are rare, I'm talking about a true one, not one that we think could be, but a true event that catches the market off guard. The underlying instability that could show its head could be sudden and quick. So how do you handle that from an investment and trading perspective? Just know where your stops are, especially your longer term stops. Until then, the market's going to keep running. If there's a longer term topping pattern that actually triggers at some point, well, maybe we'll get forewarning, but until then, the rotation zones are holding, breaking out. Gold also rocketed high. Gold kept going. So, Sterling didn't have to search for a live stream this morning. Good morning, Daniel. Good morning. Hello, Legion Reaver. Yeah, please hit the like. I appreciate that. Do you think the introduction of zero-day options has actually compressed volatility? I think it shifted some of the things on the volatility spectrum. I don't know if it might have compressed it a little. Yeah, thank you for that. I mean, there's as you've noticed, there's no monetization of anything going on YouTube. I'm gonna probably just change again after I finish the move streaming platforms. We'll figure that out. All right, let's get through this. Initial jobless claims coming in better than expected. Continuous jobless claims coming in better than expected. Philly, this is interesting. The business conditions, huge jump in there. New orders, big jump there from prior. Prices paid still positive, but a big decrease there, and employment still negative. So you could take some of this like, oh, prices paid are coming back down, so maybe it was just a blip earlier, but we'll have to see. I mean, this is a regional index. These conditions, I mean, a huge jump in that. These regional indices are jumping all around, besides Texas. We have the S&P Composite Manufacturing and Service coming out 15 minutes after the cash open. Existing home sales 30 minutes after open. Consumer Report leading index still expected to be negative. This has been negative forever. I just don't know what to say. Although then we get Barr speaking at 11 a.m. So the S&P 500 map, again, unless you're Accenture that reported, which is down 6.56, and I mean, Apple slight pullback, it's buy everything. Buy everything, especially Micron, huge gap up. Huge gap up after post earnings yesterday, up 16% pre-market. Technology, comm service, everything positive except consumer defensive at 0. But everything positive. Sell vol, buy it all. Buy everything. No matter the price, everything's good. That's all you got to remember. Everything's good in the market. We have still the pause for May, and then the cut priced in at close to 70% for June. But definitely, this is going to get interesting with if they're actually going to do 3 cuts and they start in June, because I think they'd have to do a pause, but cutting in September right before an election, or you have to pause until November and December if they're going to get 3 of them in. It's going to be very interesting, and I think their Fed is boxing itself into a corner, and that could be also a thing with instability. Almost, if this market continues to rally today, we'll be back in extreme greed. Also, the Schiller PE almost over 35, complete nosebleed territory. But again, fundamentals, unless you have major earnings expansion, I'm talking major, these fundamentals are stretched from they're just completely stretched. Now, after the close today, I already said Accenture was down. Today, we have Nike, Lululemon, and FedEx. So let's see if the athletic wear, leisure wear still is rocking the world, and FedEx, how they see things with deliveries. So that's going to be very interesting after the close, and then there's nothing tomorrow. What else have I missed? Good morning, McRangers. Thank you for tuning in. Are we politicizing monetary policies along with justice? I think everything's getting politicized. However, doesn't matter what I think. We trade the markets. Again, thank you everybody who watched Ninja Trader yesterday. Again, I talked about the rotation zone, so if you wanted a little more clarification, or if you're newer here, you should definitely watch my segment, and watch Bob's segment, of course. But we've caught on the rotation zone. Strong rotation back up. Yesterday we had 52.82, closing just above that at 52.90. What did we close at yesterday? 52.86. So those little levels are done. The next major ones, 53.26, and then 53.96. So essentially the magnet to 5,400. Today, on the shorter term, you do have on the I believe on the NASDAQ also, yes, you do on the S&P and the NASDAQ also have a little mini potential double top on the open. That's it. That would at least need a follow through. If it did break down into the open, it would at least need a follow through with a 1 hour close to continue to hold it. And remember, it is against the rotation zones, although it could return it to that 4 hour rotation zone. So that's the only bearish pattern going into, or I should say potential bearish pattern, would need a close below 53.0150 on the S&P. And real quick, jumping to the NASDAQ, we'd be needing a close below 18,569.25. Okay, so those are the only bullish patterns. Reminder for everybody new, the levels are 20, the 50% extension, 75, and 1. And I'd use the right-hand side on the S&P, but we don't know if it's going to push up in the open, so therefore I'm using the left-hand side. And the NASDAQ, the more conservative side, is the left-hand side. And I'm definitely using the more conservative side because we're going against the rotation zones. Other than that, if it did continue the biggest drop into, here's your Fed, the next level I'd be looking at, if we got back through about 52.87, would be about 52.78. And then about 52.72. There is a clear path down there, but again, you're going against the rotation zone, so I'd be watching for a pullback and then another bounce higher, at least with the reaction to that 4-hour rotation zone. If we dropped above 15, I have not flipped this over, by the way, on the NASDAQ yet because we have not taken out the technical highs, but I'll be looking at about 18,600 as the first key support, and then about 18,515 to 18,500 is the next support on a reversal. Also remember from the overall, we're back getting into overbought on the weekly in the NASDAQ, but that doesn't have to stop things. You see on the weekly rotation zone, rotation up, dip into it, rotation up, dip into it, rotation up. Letting the 8 catch up. Remember, this is the concept of 8 pushing the price, rotation back up. But everything, and back to the S&P has just been pinned to the top with no stopping sight. And this is what I mean. This is not normally a healthy market when you get stuff. It's a good market for a bull case, but it's not a healthy market when you don't even get proper pullbacks. It leads to more instability, and then you can get the sudden shocks. That's what I'm on guard for, but until that happens, gotta trade with the trend. That's why I use the concept of the rotation zone. Good morning, Anissa. Oh, thank you, Anissa. Great show, Ninja. Thank you for being such a loyal follower. Good morning, George. Again, I'm just trying to share as much information as possible with people. Try to really help why I look at things. And I tried to clarify that with some ninja stuff where I don't want to have extended targets beyond the rotation zones, especially for any short patterns. And a lot of short patterns haven't even been triggering. And they've been mini patterns. Dow, yesterday we had that 40,000 level. It blew through the minor levels, the 40,000 level. And it got up to 39,988 today through that. I mean, this is how insane it is. This is how insane it is. I got to go and see what the next significance is. About 40,200 and then 40,600. Those are the next two levels I'm going to be watching. 40,002 and 40,006 on the Dow. You might get the mini. Doesn't look like it's there yet. I'd be watching for the little mini double top if it does form. Other than that, 40,002 on the rally. The key support level is roughly around 39,980. And then you have 39,850. The Russell, huge reversal yesterday. Huge reversal back up. So if they're finding a pretty decent resistance there, about 21.23, if it does break out to the upside, 21.48 is next key, and then 21.75. There's some fair amount of resistance up here. So the Dow, at least the Russell looks like it's waning, but the support level is coming back at 20.95. Here's what I'm talking about with the VIX. So the channel finally was broken. The channel that's been stair-stepping higher all of January, February, finally broke that. Finally broke it. Because May's already bumped in with a pause, so I think it's essentially clear to sell volatility again. The only thing right now, the only thing that I'll be watching in the little minor short term is around above, if it spikes above 13. That's really about it in the short term. The DAX, a little reversal up here. Not yet. Nothing's really changed with the DAX though. So I can there. I'm trying to move up the targets, but key support on the DAX is about 18,280. The notes trying to climb back up. I'm going to be watching for a rollover play in this. I think this was a very muted response. The stock market took it much more dovishly. You can see we've got a little 3-day pullback. We might have a %B buy setting up. I think the yields I'm going to be watching because we still have the longer term up pattern. We have a nice little pullback. We could get a %B buy, getting cycles to the bottom. I'm going to be watching for the next pop up in here. The only thing that would short circuit that I'll be watching for, from my perspective, is a close below 4.15. If this continues to pull back and closes below 4.15. The 10-2s, not much to talk about there. Dollar index. Big reversal. Remember I said yesterday, I'm going to be watching to see if it closed above the 62.5. Obviously did not. But now we're having a pretty strong counter reaction. A pretty strong. So this will get interesting. Pulling back to that 50%. So I just did the harmonics coming from the lows on Friday the 8th to yesterday's highs. Spiking between that 50 and 62.5 and rotating up strongly. So this is very interesting. I'm going to be paying very close attention now to the dollar, which is coming back, and to the yields over the next couple days. Crude, pulling back still. As long as it holds above 80, just a normal pullback. Just a normal pullback, and we'll be watching for the rotation back up. What else do we have? I'll get to comments in a second. Gold, all right. What's up with gold settlements? Do you see here? Because this is a %B buy. Remember I said if it closes above the high. Now, if I take off the settlement price, because if you're going to trade the breakout of the high intraday and then follow it through and decide to hold it into close, you're going to use that information before settlement comes out, because you have to make a decision. You have to be going into when it should be closing. Is it going to remain above the high? Well, this was the non-settled price, okay? So, I mean, it was roughly 2189.6. Let's just go 2189. Then they come out with the official settlement price, and look at that. 2161? I mean, come on. This is an absolute joke, but that's why I use in the metals, I don't use the settlement price. Because you have to make a decision based off your position. And that, I mean, I can understand settlement, in the S&P can be, even a point off. But gold, you're telling me that this is the settlement price? Nuh-uh. So gold was a %B buy, by the way. Okay? Going up, spiking to new highs. So now it's in complete trailing mode. Silver, launching itself up, but silver's still been in bullish mode. Also, you see silver. Look at the settlement on silver. There's non-settlement price where the market closed due to trading. There's the settlement price. Copper, still keeping an eye to see. The only thing, this did not get into exact double top territory yet today. It missed just slightly. Just keeping an eye on that, because that could pull back to the breakout zone. What else have I missed? What else? What does history tell us about stock markets in U.S. presidential election years? Well, I think they're traditionally, on this, the second term election year, is traditionally bullish. But everything, I mean, who knows in this friggin' market? Yen, I mean, this is a similar reaction on what I think we had yesterday. Powell was not hawkish enough. The same with the Bank of Japan was not. They hiked a minuscule amount, but they weren't hawkish enough. And the yen just keeps getting weaker. Now, this is still in the intervention territory, but nothing yet. Tried to break down below key support and snap back up immediately. The euro, This was complete. You had to be very nimble to trade this, but this was a double bottom. You can see it real clearly on the hour. But with the volatility with JPOW, you see closing in there and then finishing off. So that you had to be really nimble to try to trade that. And now we ran up. That was the only thing. And now it's looking to roll back over. So I'm going to be paying attention to where the euro closes over the next couple days to see if it does not sustain this bullish move, the opposite of the dollar. Bitcoin, then I'll get to the spiders. We had the reversal after trigger of the head and shoulders. With it was buy everything yesterday, but the Bitcoin, I'd be really watching the 69,100 level for if it's going to move. Spiders, we had 520.65 as the next key level. We closed at the high was 520.62, the close was 520.48, but now we're gapping through that level. The next major level is 524.69. We're trading 523.18. The rollover play, I'd move up your harmonics on the open, but the rollover play would be to 520.62. And then once you get the open in here, if we do pull back, I'd be watching those S&P, E-mini, and the NASDAQ potential double tops. I'd use the 12.5% harmonic. I just can't put it on here right now. I mean, roughly it's going to be around 521.25. But 524.69, then to 531.17. And then the gap filled yesterday would be to 520.48. The Qs. The high level from back at Friday the 8th is 448.64. Right as where it looks to open. A move through there, 451.24. The key pullback level is going to be around about 446.65 to 445.86. Again, watch that potential NASDAQ double top. I got your spiders and your Qs. Yeah. First of all, if it's with the rotation zone, I personally give it a lot more room. Okay, so like gold with the rotation zone. Okay, so I mean the worst case, your stop's still below this levels, 2150. Here's what I'd be watching right now. My stop for a partial, because remember, these are short term, but it depends. If you're trying to roll this into a longer term play from a short term pop, I like to unwind stuff as it gets into key levels, and at least a stop raise level was this 2220. Now, absolute worst case for me would be just at this high area of 2166. Realistically, I would not have a stop on a closing basis below 2177.70. Why? Because, again, just use the rules that I keep putting forth to try to help people learn this. If you have this pop and then it closes back below the 50 to 60, closes within the 50 to 62, it's still fine for another rotation back up. But if it closes below the 62.5, what's it most likely to do? Not guaranteed, but the probabilities then shift to a return to this area. I don't want to ride it all the way back down. Now, if you're going against something like, let's say, a Tesla, all right? You know, it was a gap up percent beat buy, really hard to trade this. I'm just using this as a hypothetical example. Going into the rotation zone, because this is longer term bearish, much more aggressive from my perspective, because any area here could be a rollover. Okay, there wasn't one in NVIDIA, but let's say there was a percent beat buy in NVIDIA. It's still with the rotation zone. So I'd be a little more conservative with the stop. So that's how I handle it. Against the rotation zone, more aggressive because the first target is in the rotation zone on any pop. With the rotation zone, a little more lenient. Does that make sense, Jacob? Please let me know. I got a stock that appears to be a pig, but has a lot of insider buying recently. Take a look at NN and give me your thoughts, please. And thank you. Then we'll get to, I want to look at NVIDIA too. NN. I've never heard. Ooh. What's that? A string of beaten on revenue, though. Let me look at the longer term. It looks like it's trying to build a base. I mean, in the short term, if it's got insider buying and it looks like it's trying to still build a base. So as long as you really don't get a close back below this 365 area, worst case, my stop would be 325. If this were to break down back below that with insider buying and trying to build this base, I would not want to hold it anymore. Until that, I'd be fine looking at holding it. Yeah, it might be. It just depends if you've position sized accordingly, then it wouldn't bother me unless you're overweighted in that. And then if you were overweighted, and I don't know anywhere again, it depends on your entry price and everything else, because you can always lighten out into these highs. And at least, because there's no guarantee it has to break out. By the way, NVIDIA, pay attention. Remember, we did not close below the rotation zone yet. We're now gapping up to that 924.37 area. That's very key to watch into today's close, because that would shift the probabilities back higher in NVIDIA. It already rejected that area back on Monday the 18th. So watch that really close. You're welcome, Jacob. Let's just see how this S&P is looking into the open. All right, so you still have the potential double. This is the conservative side now, and you still have the potential double. So that's the only minor thing going into that open. That could be a pullback. Let's take a look at the tick. The tick, not above 1200, interesting enough, but pretty strong opening. Pretty strong opening. So now back to the S&P. On any pullback, I'd be watching for it to come into support unless the tick absolutely collapses. And based off that strong tick opening, if it did close back below this 5,300 area, we could be in for a pullback day. Remember, a couple of the post-Powell ones have been strong rallies, right? Initial post-FOMC, and then some reversal the next day. So just pay attention to that, and pay attention if that tick really starts dropping. If it's just a pullback towards that zero area, it's fine from my perspective. All right. That's where it's at. Also, even if you don't trade it, I'd keep real close notes in these 10, or real close eye on the 10-year and the dollar today and tomorrow. With that, I shall talk to everyone tomorrow. Have a wonderful, wonderful trading day. Bye for now.